All right, let's go to the global space now. British house prices fell by 0.6% in April compared with a forecast for no change as a discount on property transactions ended. Data from mortgage lender Nationwide showed this. The figures also show that house prices were 3.4% higher than a year ago, lagging a consensus for a 4.1% annual increase. The 0.6 monthly drop was larger than all forecasts that an economist had expected, which had pointed to a flat monthly reading after prices stagnated in March. And German retail sales fell and import prices rose in March, according to data published today, pointing to higher inflation ahead of persistently weak consumption. German retail sales decreased 0.2% compared with the previous month. The Federal Statistics Office showed this after a prediction of 0.4% decrease. Although the unemployment rate remains relatively low and real wages are developing positively, retail sales have fallen from a low level. To avoid a third year of contraction in 2025, economists agree that boosting consumption in Europe's biggest economy is crucial. U.S. President Donald Trump's tariff offensive is threatening two-way trade between Germany and the United States and risking major damage to an already limping German economy. And closely is in France. French consumer prices have risen more than anticipated in April, as a further fall in energy prices was partially offset by the rise in food prices. Preliminary data statistics shows this. France's harmonized inflation rate, adjusted for comparison with other Eurozone countries, increased 0.8% year-on-year in April. According to a Reuters poll of 21 analysts, had on average expected a rate of 0.7%, with estimates ranging from 0.5 to 1%. And still in France, the economy grew slightly in the first quarter as stagnant domestic demand and weak foreign trade were offset by companies rebuilding inventories. Preliminary data also indicates this. The Eurozone's second biggest economy grew by 0.1% in the first 3 months of the current year, after a slight drop of 0.1% in the fourth quarter of 2024. And economists also have their eyes on this. Well, away from France, but still in Europe, Hungary's economy unexpectedly contracted in the first quarter because of an industry slump, highlighting the country's trade exposure even before the U.S. President Donald Trump's tariff on global economies. Gross domestic product dropped 0.2% from the fourth quarter of last year and was flat on annual basis. The Budapest-based statistics office said that the median estimate survey for 0.4% growth for both quarterly and annual GDP. President Donald Trump's tariff prompted several of Europe's largest automakers to scrap financial guidance underlying the extent of the chaos unleashed by fast-changing trade tactics. Jeep owners Stellantis, Envy, and Germany's Mercedes-Benz Group today withdrew their forecast for this year, citing the duties were upending supply chains and driving up prices of cars around the world. Volkswagen also has its outlook largely unchanged, but one that it didn't factor in the impact of the levies. I'm talking about the tariffs. Let's find out how it's going in Canada, one of the first to be hit by Trump's tariff. And we're doing this with the Chief Executive Officer of Africa Canada Trade and Investment Venture, Mr. Kenneth Oguzie. So Mr. Oguzie is in Washington this time, but he lives in Canada and will tell us, what's going on there. Mr. Oguzie, good morning and welcome to the program.
Good morning and thanks for having me.
Great. So how is this biting Canada on individual retail consumers level?
I think the tariffs, in terms of the impact of the tariffs, I think it's something that just keeps unfolding as the day progresses. For starters, the outlook is not the best. Because if you think about what tariffs are, which is typically just taxes imposed on importers in terms of goods that are not locally produced. So typically, when you do that, some of the things that are likely to happen, like we have seen in the past, would be, the importers might end up slamming the extra taxes costs on consumers, which then drives up the prices of, those goods. So ultimately, the consumers have to pay more. So when you think about that, then what does that mean? Then individuals have probably less money in their pocket. So looking at that, long term, you could look at things like slower economic growth, because what then happens is people are less likely to buy more, and then of course poverty rates increase and all of that. So right now, from a forecast standpoint, except some of those tariffs are really looked into and maybe adjusted a little bit, it's not a good look from an economic standpoint. And countries are sort of running around now trying to see how can we create some sort of interim measure to really help mitigate the impact. But how much really can you do? So these are some of the ongoing conversations around it.
Yeah, so I think one of the things countries are also doing is changing their trade partners and trade routes. I wonder how Canada is handling that.
So in terms of Canada, when you think about a country like Canada, U.S. exports, for example, make up 21% of the GDP. So you would probably look at alternatives. Canada is looking into countries like continents like Europe, looking at places like Latin America and all of that. But the bigger problem is that U.S. is a big trade partner for Canada, and it's a big market. So when you talk about the volumes of consumers in terms of how much you sort of push to that country, can you really match it? The best you can do is just to sort of mitigate it. So no matter how much Canada is looking in terms of diversifying its trade partners, the US still remains a very, very significant portion. And it's not very likely that they can manage that volume of trade, which they typically push out to the US. So I know right now there's a lot of conversations, sitting down with the European Union, thinking about, what are some of the ways they can work together to ensure that they sell a bit more to each other. And of course, the most important thing, managing that balance of trade, which has been one of the concerns President Trump has typically highlighted as one of his reasons for putting up these tariffs, especially around Canada, that there's too much trade deficit in terms of vice versa. But of course, you can understand as well, because when you look at crude oil, which is one of the and energy as well, which are some of the key components that Canada has been pushing to the US, those things are really high volume items or tokens. So it's really difficult to sort of get that balance of trade to be very favorable, especially when you are playing in certain spaces. So diversification is a big conversation, but what remains is how much can you really ensure that you are at least close to what you had before with the US in comparison to all the other smaller markets like the US or like the European Union or maybe Latin America
All
or
right.
any other region.
All right, Mr. Guze, just hold your thought for just a minute, because for our DSTV viewers, there's an event, a Stand to End Rape initiative on women's representative in politics. That's an event that's holding in Abuja at the CBD Abuja, and that's where we'll be leading you to. That's our DSTV viewers, but on our other platforms, local platform and Channel 24, the UK, we're still right here. And if you're watching on YouTube, you can just jump to the next platform and you'll see us here on Business Morning. Now, Mr. Guze, you talked about, the bigger markets. One of the conversations that has come out of all of this tariff is the potentials or the opportunities that it opens to a continent like Africa. Do you see that coming to bear anytime soon between Canada and Africa?
Well, I mean, there are different stances around this. People have seen this in various ways. Of course, most of the work we do is really looking into ways to grow that sort of volumes of trade between both regions. That's Africa and Canada. But there are a lot of questions. There are a lot of questions. Typically, one of the criticisms some people have made, especially around, let's just talk about like exports from Canada to Africa, for example, is the fact that most of the Canadian products, they are very premium. So premium in terms of the price points, they play more quality, but they're not the best in terms of competing on prices, which sometimes might be a struggle in Africa. Of course, we have the growing middle class and all of that, but I think a lot of times businesses that have been successful in the region has been businesses that sort of been able to adjust their prices to reflect the realities of the local people. So it's left to be seen in terms of, are there some areas that Canada itself can actually look into how it can tweak some of the products to ensure that the market, there's a favor. But then when you then look at from the African side as well, there might be opportunities for African businesses, to be able to start playing into Canada. Now, what that looks like is also another conversation, because at the end of the day, it's about thinking about what are the right products, looking at things like quality control and what have you. But one thing I know for sure is that Canada is sort of strengthening relationships with older trading partners, not too much about new partners. That's not really what I want to see. And, we are advocating for that a lot because we think, what, this is an opportunity to start growing or strengthening the relationship you have with Africa from a trade standpoint. But what we have seen in terms of movement from stakeholders has just been sort of, okay, yeah, we've been trading with Europe in the past. Let's see how we can grow that trade or, sort of adjust or tweak it or sort of increase the volume. But another thing that is left to see is that, we just had our elections here in Canada, so there's a new prime minister, and the hope is that, or the expectations is that by the time he starts putting his cabinet together, there might just be that opening of conversations around Africa again, because of course you had the Africa strategy, Canada-Africa strategy, which was released about a month ago. Not the best strategy, was still strongly aid focused, which has always been a big criticism in terms of Canada's engagement with Africa. But just to cut the, just to bring it back, I think no one really knows. No one really knows. But I think all the stakeholders just typically have to keep sort of magnifying that conversation or that message in that, Africa is ready for business. There are numerous opportunities. Even if you don't want to play across the whole Africa, pick up some critical regions, critical economies, big economies like Nigeria, Kenya, and South Africa, and you could actually use those to, close those gaps in terms of some of the imports you have actually started missing because of the trade, the tariffs wars going on.
All right, thank you so much for your insights this morning, Mr. Aguzie. Mr. Aguzie is the Chief Executive Officer of Africa-Canada Trade and Investment Venture.
Thank you for having me.
Well, a bit more on that. China's used cooking oil, that's UCO export to the United States, its largest buyer, are set to plunge in the coming months because of steep tariffs, forcing sellers to divert shipments to Europe and elsewhere. This is according to industry players. The Trump administration now charging 125% import tariff on Chinese UCO from this month. Shipments to the U.S. valued at $1.1 billion last year are tumbling, with the last cargoes sailing around late March and early April before trade grinds to a halt. And China's UCO exports hit an all-time high last year at nearly 3 million metric tons, and it's worth $2.64 billion. Away from that, in Thai, the central bank has cut its key interest rate by a quarter point for a second consecutive meeting that happened today in a move to support an underperforming economy facing uncertainty over steep U.S. tariffs. The Bank of Thailand's Monetary Policy Committee voted 5-2 to reduce the one-day repurchase rate by 25 basis points. And also, Xiaomi Core has debuted its first open-source artificial intelligence large language model, and it's called Mimo, joining an increasingly crowded stable of technology giants seeking to gain a foothold in the fast-growing industry. The launch of this new model saw Xiaomi's shares surge 5% in Hong Kong trade. Well, that's the package for Business Morning this Wednesday. I'll see you at 1 p.m. for update from the world of business. I'm Ini John Mekwa. Talk to you later.